against Bitcoin.
It's going up everywhere.
You're against Bitcoin, you're against freedom.
Yo, welcome to some Bitcoin Live, your number one resource for the peaceful Bitcoin revolution, cover breaking news, culture, matic warfare. We will be your guide through the separation of money and state. Ladies and gentlemen, welcome to Simply Bitcoin, the most watched daily Bitcoin live show on YouTube, Rumble, and X. Sit back, relax, enjoy the ride. We have lots of content to cover today, lots of breaking news. It seems like, look, everyone was so hyped. I saw the tweets on Bitcoin Twitter. Everyone was so pumped about the Hong Kong Bitcoin ETF launched. What happened to the price? It dumped. We made an argument yesterday that potentially the Hong Kong ETF could be potentially being used by the Chinese government to cause downward sell pressure on Bitcoin. I think it's more macro than that, to be honest. We have a guest today. We were talking before we went live. He has a take on that, and it's a very similar take that my dad told me earlier on this morning in regards to the Fed meeting that's coming up. I think a lot of people are watching on the sidelines and seeing what this guy in a suit on TV is going to tell the world what the price of money should be and how things, like, holy cow. I can't believe we live in this archaic system. It reminds me of this scene from The Simpsons. I'm sure you guys have seen it, where like they're trying to make a decision on like, oh, should we bail out? Like, what should we do? And then like they literally, this is a cartoon, YouTube, okay? This isn't our content, but they literally cut the head of a chicken off and they just put it on a flywheel, and then like wherever the chicken stops is like the decision that they made. But I think it's like a great metaphoric like type of representation, basically saying that if you pull away the curtain, like they don't really know what they're doing. Like their options are just to print more money, you know, that obviously disproportionately hurts the lower and middle classes the most. You know, their tool to slow down inflation is to basically hurt the economy and stop consumer spending. Like it is archaic. You could have made an argument that before Bitcoin, that was the best method. But obviously, from a Bitcoiner's perspective, you're looking at that, you're like, dude, that's absolutely crazy. So yes, we're going to cover the BlackRock ETFs today. The ETFs, not only from BlackRock, but Fidelity and ARK, they're all going sideways. So the inflows actually for BlackRock specifically have been frozen for 4 days. So those inflows that we saw in the early part of the year, they seem to be slowing down. Now, to be fair, from a historic Bitcoin price perspective, and again, we're not really chartists here, we don't like to speculate on the price, something very similar happened last cycle, right? We had that, you know, the bull market went to 20K, went down to 3,500, then it pumped to 1,600, then it landed at 10K, and it kind of, you know, it had that initial pump from 3,500 to, I think it was like 1,600 or 14,000 or 16,000, and then it kind of leveled off at 10,000, and then the parabolic move happened about 9 months after the halving. So if you look at it from that perspective, it seems like Bitcoin is right on track, to be honest. And I was getting a little bit like concerned, the fact that we were just going on a straight line up, because that would have just ended the cycle short, right? So I think a consolidation period is healthy. And I think it just sets a platform for this liftoff that, if it happens like it's happened historically, tends to happen about, like I said, 10 to 12 months after the halving. So if it follows the historical pattern, midpoint 2025, this thing goes parabolic. Of course, you know, past results are not indicative of the future, but you know, it is Bitcoin, right? It's very special, and so far that pattern hasn't broken. In other news, I also want to cover the relentless attack by the administrative state, the DOJ, against privacy, and I think it's going to lead into an attack on self-custody. That isn't just me saying that. We had the Bitcoin Senator Cynthia Lummis. She came out with a tweet this morning addressing it as well, that the DOJ is going after, quote, Bitcoin non-custodial software. She's getting ahead of the curve. Like, she's seeing what we're seeing, which is the idea, which is basically they're trying to set a precedent and say, listen, guys, if it's not in custody, if it's not a hosted wallet, somehow we can enforce AML and KYC laws. And if you boil it down fundamentally to the basics, like, they're trying to scare the public into the idea that somehow writing down 12 to 24 words and taking custody of that is somehow a danger to society. And make no mistake, there's a full court press on this. CZ, the richest man in history to be put in prison. They gave him his sentence yesterday. Roger Ver, one of the Bitcoin OGs, the whole Bitcoin Cash thing happened as well. He's very unpopular with the community. He got arrested in Spain for tax evasion. And mind you, he gave up his citizenship. It appears that he failed to pay his exit tax. But think about like what I'm saying, which is like pretty crazy. And I don't want to get into the conversation of taxes and all that, because there's like legality to it. But if you like really boil down to it, it's almost as if like the US, like these governments are like holding you hostage in a way. Right? Like it's interesting. It's interesting. All of this was predicted, of course, in the book, The Sovereign Individual, which you guys know I'm going to read from today. But it's going to be a hell of a show, and I'm really excited for it. So anyway, I do want to bring up my very special co-host, always optimistic. He's wearing the Simply Bitcoin hat right now, which, by the way, you can get on our merch store. All you got to do is scan the QR code or check the link in the video description. And you guys can get yourself a Simply Bitcoin gold Bitcoin. That's the dad hat, right? That's the dad hat.
Yes, sir.
I don't know why they call it the dad hat.
It's because dads wear them, but I'm not a dad, so
Opti
not really working.
Is a dad. Breaking news. Christine Lagarde.
Not
Opti.
that I'm aware of.
We also have Mauricio from Lend. Man, how you doing, bro?
Wait, Nico. Before we get to Mauricio, I'm gonna let you finish. And I know you're talking all macro and FOMC meeting, and the global economy is going to hell, and there's wars and all this stuff. But what's really happening is 58K gang made a return, and they absolutely nuked us. So if you want to blame anyone, blame 58K gang. Anyways, Mauricio, what's up, bro?
Hola, mi panas. Good to be here. Great to see you guys.
Dude, I'm so happy that you're on the show. There's not that many Venezuelans. I think there's a handful of us.
Just a little bit, right? Just a few of us. But hey, man, thanks hyperinflation for showing us the way to Bitcoin faster, accelerating the path to Bitcoin for us.
Oh man, well, we're really excited to have Mauricio on the show today. During the culture segment, we're going to talk about Lend. So, Mauricio, could you give a quick elevator pitch, 1 to 2 minutes, what Lend is to our audience?
Yeah, I'll keep it very brief. Lend was started by Adam and I in 2018 because we were tired of selling our Bitcoin. So we were looking for somebody to take our Bitcoin as collateral and then lend us some dollars so that we wouldn't have to sell it and we wouldn't create a taxable event for ourselves. And nobody would give us one. And the ones that did required tokens and then had done ICOs and things. And we just didn't think that was a valid long-term approach. So we decided to build the most transparent and honest Bitcoin-backed lending service we could. That is Lend today, and we helped a lot of people already not sell their Bitcoin. I think some of you listening might have used us before, we just expect to keep doing that. It's been a great year so far, and we just want to keep doing what we do.
Absolutely, and mind you, I've definitely used these products before, where there is an element of risk in the sense that you have to be very responsible so you don't get margin called because Bitcoin does have volatility. But it's like you said, right? Let's say you don't want to sell your stack, right? You put up your Bitcoin, some of your Bitcoin as collateral. You can borrow it against you. You get a cash loan, right? And then as the price goes up, you could obviously pay some of that back. You don't have to sell your Bitcoin, right? It stays there as collateral. And then you get it back when you paid back that loan, right? Of course, like the danger is there that, some people use that as leverage and, they go full degen. But if you use it responsibly, it could be a great tool for you not to have to sell your Bitcoin, and that cash that you're getting, because it's a loan, it's not a taxable event either, right? So, it's a great tool, and we like to present you guys with multiple tools that you can use on your Bitcoin journey. Anyways, guys, it's going to be a great show. But before we jump into it, I do want to give a shout out to our lead sponsor, of course, I'm talking about Bitcoin Well. Bitcoin Well is the best place to build your automatic self-custody Bitcoin stack. It's a publicly traded company coming out of Canada, recently expanded to all 50 states. It's self-custody by default. Future-proof your money. What does that mean? That means that you can't buy Bitcoin on Bitcoin Well unless you're going to take self-custody, which perfectly aligns with the Simply Bitcoin ethos of the separation of money and state. Support self-custody by default Bitcoin platforms. Go to bitcoinwell.com/simply today. Also, if you're a Bitcoin Well customer coming out of Canada, they recently announced their cash vouchers product, now available to light accounts in the Bitcoin portal. Canadian customers can now buy Bitcoin with a Bitcoin Well account using cash vouchers, a payment rail designed to safely eliminate barriers to first-time Bitcoin Well customers. So guys, if you're in Canada, check out the new cash vouchers product. If in the United States, go check out bitcoinwell.com/simply. Support self-custody by default Bitcoin on-ramps. All right, everybody, let's get to the numbers. We have lots to talk about today. Let's check it out. Here we go.
The Bitcoin numbers.
Is your Bitcoin in cold storage really secure? Is your seed phrase really secure? Stamp Seed's do-it-yourself kit has everything you need to hammer your seed words into commercial-grade titanium plates instead of just writing them on paper. Don't store your generational wealth on paper. Paper is prone to water damage, fire damage. You want to put your generational wealth on one of the strongest metals on planet Earth, titanium. Your words are actually stamped into this metal plate with this hammer and these letter stamps. And once your words are in, they aren't going anywhere. No risk of the plate breaking apart and pieces falling everywhere. Titanium stamped seeds will survive nearly triple the heat produced by a house fire. They're also crush-proof, waterproof, non-corrosive, and time-proof. All things that paper is not, allowing you to hodl your Bitcoin with peace of mind for the long haul. Stamp your seed on Stamp Seed. All right, everybody, I made it incredibly easy for you guys. All you have to do is scan the QR code on your screen. It'll take you directly to the Stamp Seed website. Do you want to put yourself in a position 10 years from now, 15 years from now, 20 years from now, where you have to explain to your children and your grandchildren why you lost your generational wealth? Because you decided to store your seed phrase on paper? No, you don't want to do that, which is why you guys want to stamp your seed on effing titanium, one of the strongest metals on planet Earth. So scan the QR code and use the promo code SIMPLY to get 15% off anything on the Stamp Seed website. At the time of recording, the Bitcoin price is $57,110. Stop the show, stack some sats, 20% discount. Probably a good idea. Block height, 841,661 sats per dollar, 1,751. Market cap, 1.12 trillion. Bitcoin price in gold, 24.8 ounces. Bitcoin versus gold market cap, 7.11%. Percentage issued, 93.77%. Decline from all-time high, negative 22.6%. So we're 22% down. That's a 22% discount. Take this opportunity. Anyways, we've been covering this topic for the last couple of days, and it is an incredibly important topic here in the United States because we are right now in the middle of the fight for self-custody. Fundamentally, it's a big threat for governments, for individuals to be holding unconfiscatable, undebasable money, especially if it starts becoming very popular on a mass scale. Becomes very difficult to control your populace if you don't have the ability to do just that. Again, this isn't just me saying that and just, some crazy Bitcoiners on YouTube. But we've been making the case for you guys after the last couple of days with the Samurai news, with the Tornado Cash stuff. We've been making the case that, holy cow, they're trying to set a precedent and they're marching towards making self-custody illegal in the United States. I remember it became very obvious to me when you started hearing words like hosted wallet, unhosted wallet. It started becoming very obvious that they don't like this thing. They don't want you to hold something that they can't just freeze at the flick of a switch. And they especially don't want you to hold something that allows you to transact with everyone anywhere freely across the world. I mean, there's that famous Barack Obama video where he's like talking about, it's like, could you imagine a world where everyone just had a Swiss bank account in their pocket? Like, that would never work. It's like, yeah, for you politicians, maybe, but for individuals, it absolutely is a good thing. Anyways, so here's the Bitcoin senator, and she's been saying what we've been saying for the last couple of days, right? Which is, this is her quote: "I'm deeply troubled by the DOJ's hyper-aggressive argument that non-custodial software can constitute a money transmission service." Very smart, because she's getting ahead of the curve, right? They haven't gotten to the point where they're saying Sparrow and Electrum is a money transmission service. They can't do that. But what they're trying to do is that they're setting precedents in order to get to that point. So she's getting ahead of the curve. Very smart political maneuver. This stance contradicts existing Treasury guidance, common sense, and violates the rule of law. Arguments against self-custody software threaten the fundamental property rights that are core to being an American. I will do everything I can to fight for your rights to hold your own keys and run your own node. Now, the last part is crazy to me, right? Like, where a politician is saying, I will do everything I can to fight for your right to write down 12 to 24 words and fight for your right to run a computer. Like, what type of dystopian world do we live in where this is even a conversation, right? Like, these are things that are specifically protected. First Amendment, Fourth Amendment, right to freedom of speech. Like, Bitcoin money is a form of speech. Fourth Amendment, no unreasonable searches and seizures. But we've got into the late stage of fiat that like, it's getting to this point, right? Where governments are all so powerful that they get to decide what computers you can run and what computers you can't run, what type of software you can run, what type of software you can't run. Like, that's a pretty crazy world, man. So I'm going to pass it on to Mauricio, man. This is pretty crazy. You have something at stake just as much as we do. You run a business that's in this industry. So, like, what's your take on all this, man? Like, this is a pretty aggressive stance from the geo. They're getting to the point where they're not explicitly saying the quiet part out loud, but, you could put pieces together and you could say, wait a second, what's going on here? What's your take?
I mean, it's a great preamble, Nico. I think what you're seeing from the government is a couple of things. So for one, I'll say Ledin is a fully regulated business, so we have to abide by compliance requirements, FinTrack, FinCEN, and all of the fun stuff that you just quoted. And I think where that stems from is the government. Obviously, the initial requirement comes from this desire to want to track any bad activity, any bad actors kind of going through the system and making sure that your system that you've worked very hard to build and protect is not enabling bad actors to move money around the world. And to do so, they want to track who's interacting with what platform. So they've used a lot of the exchanges as the sort of hubs, and they want to make sure that we are doing everything we can to track everyone's information and make sure that no bad activity is coming through. And from that, you saw actually some glimpses of where they're going through the FATF guidance, where they want exchanges to in the future start tracking people's custodial wallets in addition to the wallets within the platforms. And I think as governments are starting to crank the dial on some of the taxation rules and laws that they're putting out, they want to make sure that they can track who has what in order for them to be able to tax efficiently. And in order to do this, they want to have full oversight or full view on where everything sits. And I think this is not too dissimilar to them asking you to report, foreign assets. You could think of this as an asset that is sitting outside of their jurisdiction that they want to have visibility on and want to know what you have to potentially come after you. Now, where they draw that line as to what's fair and where should their oversight end and your privacy begin, that is a very heated debate. And it's I don't have the perfect solution for it, because again, not a lot of people do this, but if you put yourself in the shoes of the regulator for a second, how what are the tools that you want to have in place to ensure you're stopping bad actors or bad things from happening within your system. So it's not really an easy question to answer, and it's something that we do need more open debate about. I think what Senator Loomis is doing is great. She's calling this out and trying to get ahead of the debate before it gets going, because you've seen some attempts, I think, to kind of sneak regulation that could be very hurtful to Bitcoin, but it's been caught and it's been paused. And I think what she's trying to do is just make everyone aware that this is happening so that we can have an open discussion about where that line needs to be drawn. So I don't necessarily have a perfect answer for it, but I'm just trying to give you the vantage points from both the regulators as far as the conversations we've had and what they tell us is their sort of guiding light as to why they do these things, and obviously balance that with the desires of our clients, because all of our clients value privacy. They're all Bitcoiners. So we have to sort of meet somewhere in the middle. And again, I think this is a conversation is going to go on for a while until this gets sorted out.
100%. And I want to add a little bit of context to that, because that was a great response, Mauricio. So context number one, because I've seen this happen a lot on social media, right? There's this idea where a lot of the platforms get a tremendous amount of the blame for if you don't follow the regulations, they will put you out of business, right? So this is the type of thing where you have to fight it, not fight it in the kinetic sense, but you have to speak up and make your voice heard before it goes into law. Now, what concerns me a little bit, Mauricio, and I think this is where Cynthia Lummis did a great move tweeting that out, is that a lot of the recent regulation hasn't been regulation via legislation, right? Which is the correct process of it. It's really been regulation by enforcement, right? And this is why, I agree. The open dialogue is necessary. The discussion is necessary. And of course, this isn't a black and white statement, but it seems like there has been some elements where they're not really even discussing this. Like, it's more so like, we have an agenda. We want to create a CBDC monopoly. From my perspective, right? And it's like, we're potentially going to go after the CBDC competitor. And if the democratic process and the regulatory process works how it's supposed to work, which I agree with you on, where it is a legislative discussion, right? It is voted on, then 100%. But we haven't been really seeing that. It's been by enforcement, and I think that is a very slippery slope, because it could become tyrannical very fast, right?
Yes, again, I'm not a lawyer, but I'll speak to, I've spoken to many legislators and regulators and obviously legal experts, and I think one of the points that is often made is that regulation by legislation takes a long time. These debates can go on for a very, very long time. And there's going to be points of view, and there's going to be drafts and iterations, and it's a messy, messy process. Whereas regulating by enforcement can be quicker and faster, and you can do it, you'll have an Overton window of public opinion to go after these firms. So, for example, when the Overton window was open earlier in 2022 to go after some Bitcoin or crypto firms, you saw that some regulators moved to, put on lawsuits against Coinbase, lawsuits against Binance. And then once that Overton window closed halfway through last year, everything reversed back and you got all the ETFs approved and such. And so I guess the point I'm trying to make is that at times, and given circumstances, it can be easier to regulate through enforcement than it is to regulate through legislation. And so it's like a shortcut. They take the easy way out. Unfortunately, this creates an unfair world, because if you're a firm that has the means to defend yourself, like a la Coinbase or a la Binance, it's going to be a big legal debate, and you're going to land somewhere in the middle, and you might even defeat the regulator in some instances, as Coinbase, Ripple, and others have defeated the SEC in certain court districts. But when this comes against people that don't have the means to defend themselves, they just become complete victims. And not all of the cases that have been brought up recently I believe are necessarily really black or white. I think Sam Callahan from Swan had a really good piece on some of the things that led to the Tornado Cash indictment or the decision that they made against Tornado Cash, which is that they knew, these guys knew, according to the docs, that there were terrorists, going through Tornado Cash, and they just allowed it to happen. And so again, I don't have a perfect answer for this because it's obviously a very very sensitive topic, but I think it's not all black and white, and politicians, when they can, they will take the shortcut. So we have to force them back into this messy process of legislation by discussion rather than by enforcement.
100%. I agree with you. And also, like, you can't blame them, right? Like, you can't blame them for not using those tools. Like, for example, like in the Tornado Cash case, it was incredibly clear that they were laundering money for the Lazarus Group, which is associated with North Korea, which the U.S. government specifically has sanctions against, right? So, like, they needed that straw man, like they needed that like argument. And in the case of Samurai, right, if you were taking a look at some of the docs, right, it looks like there was some examples, and I don't know if they were set up or whatever. You're obviously you're taking the government's word for it, where they explicitly didn't follow certain types of rules. And again, I'm not justifying the government's action, but what I'm saying is that it's like you're giving them ammunition to go after you in the first place. And I think that we're getting to the point where we're definitely entering the then they fight you stage. And I think that, the more ammunition you give them, like they tried to convince the public that Bitcoin was being used by Hamas to launder money. And then that turned out to be total bullshit, right? So, like, they're going to use, I think it was the Winston Churchill quote, right? Never let a good crisis go to waste. And they're going to use everything in their power in order to achieve a certain goal, for sure, right? But that open discussion is incredibly important. And it has to happen because in an open discussion, they can't get away with a lot of the things that they want to get away with. They would rather just regulate by enforcement. Anyways, Opti, we're going to throw it on to you. What's the Bitcoin maxi take on this, brother?
Yeah, what's the contrarian psychopath take here? Well, first of all, love the discussion. I think you guys covered all that stuff great. So I will, add the Opti flavor on this. First and foremost, of course, hearing Cynthia Lummis say all this stuff gives me the butterflies inside, and it makes me feel good. And I love hearing her say what we've been saying on the show for a while, though I will have to caveat that with she's still a politician, and even though she's a good politician, you guys know I've been very black-pilled in regards to politicians and even trying to garner their favor, but she is I forget who, I think it's Phil, right? Isn't she his like mother-in-law? So like she's a Bitcoiner. So you love to see that she's saying what we saying and like Nika's saying, getting out in front of all this. But I really love that last two sentences about protecting property rights, because the chat's been going really hard on this the last couple of days, that, and she even kind of said it, like, property rights is an American thing. And if they come after your property, they come after your money, like, more people should be angry about this. And on that note, more politicians should be fighting back against this, which we're seeing very few politicians even care about anything in regards to the Constitution or what American values are. But hey, this is where we are right now in the story. But I do want to mention, did you guys see, and I put it in our show notes, Nico, but did you guys see Marty Bent did a couple screenshots from a Wired article about the cypherpunks? It's like 20 years old or whatever, but the parallels between what we're seeing right now with you taking custody of your Bitcoin and what we saw with PGP, and even someone in the chat said what they try to do with DVDs, it's all playing out exactly as it had in the past. Again, the present doesn't, or the past doesn't repeat, but it rhymes. And this is where we are right now. We're seeing that they're literally using the same low-hanging fruit scare tactics that they've used in the past. And we're in the then they fight you stage. Like, we know where they want to go. Of course, they are trying to play 5D chess, and they're trying to position themselves to stop you guys from taking Bitcoin into custody, from basically owning your own money. It's like putting your money in your wallet. They're basically saying you can't have cash in your wallet, guys. That's an illegal thing. Only criminals do that. But since we are dealing with a new technology, you can tell that they understand that most people don't understand what's going on. And so they're trying to gaslight the population and get ahead of this and call us all criminals. And all we're really trying to do is protect ourselves. So I do love the fact that Cynthia Lummis is saying this stuff, and hopefully more politicians do say this. But again, you know, you guys know what I said yesterday. I've been getting a little blackpilled in regards to the political favor of Bitcoin because they always seem to stab us in the back. But hey, she's saying what we've been saying here on Simply Bitcoin. So at least the signal is getting out there and more people are waking up that this is actually what's happening. We know that they want to stop you guys from taking control of your money because, as Chrissy Lagarde said, you know, Bitcoin is the escape hatch. And if there is an escape hatch, people are going to use it. And we're seeing that people are using it. And I think the move that we're seeing of them trying to stop Bitcoin adoption, stop the on and off ramps, stop people custody their Bitcoin, just really goes to show that like this Bitcoin thing is catching on and they're doing their best to stop it. And it just makes me feel like, man, we're winning so hard.
Yeah. And again, like I just like as long as the discussion is brought up to light, they're going to have a much more difficult time. And I think that's really what we have to push for. More politicians like Cynthia Lummis, like making the discussion out in the open. People are aware of it because then they won't be able to. Mauricio was talking about the Overton window, which is something that you guys know that I bring up every other day. Right. The goal of us Bitcoiners is to really shift the Overton window in terms of normalizing self-custody. Right. Because if it starts to be normalized in the eyes of the public, then they can't convince people that somehow it's dangerous. Right. And I made this as a, you know, and you're going to appreciate this, Mauricio, but I said this as a joke where I said, guys, now we know the playbook. In order to get a libertarian candidate elected, all we need is 150% inflation. Of course, I'm referencing Javier Milei in Argentina. Right. So, you know, and that was a huge shift in the Overton window. People were sick and tired of the traditional parties. And they're like, it's time to try something new. And it seems like he's already got inflation under control and he's only been in office a couple months, right? Well, look at that. Austrian economics works. How crazy is that?
Well, no, but you know what? And I want to make a few points here. So for what happened in Argentina to be able to repeat itself in a place like, say, Venezuela, the real winner of the Argentinian election was not Javier Milei, was the Argentinian democratic system, because it allowed a change of power or a change in the guards that no one thought would be possible. For example, in Venezuela, we can't have free and fair elections to throw away Maduro because they know they will lose. And the second they lose, they know they're going to end up in The Hague. And so if they allow themselves to lose, they're not going to voluntarily, buy themselves a ticket to The Hague. And so they don't allow free and fair elections. For Argentina to have done so is an admirable feat, and I applaud Argentinians, and I'm very, very happy. And I hope that the renewed strength in the Argentinian peso is not a valid enough reason to say that you don't need to kill it anymore. You need to end the central bank. You still need to do that. So don't lose track of that. The second point that I'm trying to make around why Bitcoin bothers or why Bitcoin is a thorn in so many people's shoes is because I'll give you the example of what happened in Venezuela. When the government started mismanaging the economy and printing money into infinity, the US dollar, which back then acted as our Bitcoin, started soaring. And what the government does is it said, no, it's only speculators that are transacting in this speculative asset, the US dollar. We're going to cap that, and we're going to be the only ones able to sell and buy dollars to the citizens through us, the central bank, at this rate that we fix. And so when they do so, they effectively create the government market and the people's market, because people won't stop needing US dollars and the government's quota won't do enough for your business. So you'll go and start buying and selling, US dollars. That will create a parallel rate, so a parallel value to your local currency, a value that people will look at and they'll say, oh my God, like why are these two values so out of sync? Is the government lying to me? Newsflash, yes, they are. But this lie keeps getting bigger and bigger and bigger because they are reluctant to basically mark to market their exchange rate with reality. So they'll find any which way to not have to market their mismanagement. Bitcoin, when people would say, "Oh, the U.S. economy is crashing," people would say, "No, look at the house prices, look at the prices of gold and things like that." They would say, "No, house prices are rising because we have so much immigration into the U.S. Everybody wants to live here, which is not building them fast enough." We know that's BS. The house doesn't get better over time. Okay, your dollars get weaker. We all know that by now. But there's this fancy explanation as to why your house grows in value, or why the U.S. government bond goes up in value, or US stocks go up in value. There's always this idea of American companies are doing great, or the US bond market is great. Look at our Air Force carriers. Everybody wants to be, holding their money in US bonds. They have these beautiful narratives that are pro-America for the debasement of currency or amongst all these other assets. But along comes this asset like Bitcoin that just shows you that it's just going into infinity. And it's not that it's doing anything special. It is the dollar getting destroyed and mismanaged. And it's flying in front of your face. And they're trying to do everything they can to stop it from flying, but it won't.
100%.
End of rant. End of rant.
Okay.
No, dude,
wait, rant a little more, because we got a trolley question in here for you, Mauricio. And he goes, what's our guest think of the Venezuelan Bolivar?
So I wrote a piece a while back, and it says bad money doesn't die, it just resets. And I'll tell you this, in Venezuela, in my lifetime, there's been 14 zeros wiped off the currency.
Amazing.
That's a number of zeros in a trillion. You find me another currency that deserves to die more than that. There isn't one. It should have been dead long ago, but the government won't kill fiat. And this might not be the most popular comment among people listening, but the governments won't kill fiat. It's impossible for them to kill fiat. They can't do it. It's too powerful of a tool. Like the Venezuelan bolivar should have been dead a long time ago. The Cuban currency should have been dead a long time ago. The Argentinian currency, Zimbabwean currency. Like there are so many currencies that should have died that haven't and won't, because they are. And the reason they don't goes all the way back to politics. If you go to Venezuela today, there are still people using the bolivar. And you ask them why, and they'll say because it's the one currency that's accepted everywhere. And it's ludicrous, because these guys have been through 1,000,000% inflation. But you go and ask them where inflation comes from or what it is, and you won't get a straight answer. In Venezuela, poll 10 people on the street, and 9 of them won't be able to tell you where inflation comes from, even though we've suffered and gotten destroyed by hyperinflation. And that will hold true on most economies. Like, go outside. I challenge you. Go ask 10 people wherever you live where inflation comes from, and the answers will completely surprise you.
Yeah, 100%. I mean, people are just we have a lot of work to do from the educational perspective, to say the least, right? We have a tremendous amount of work. Anyways, I saw a question in the chat from James. His link to Lend for Loans, guys, better on the screen. Guys, we've been pulling it up right there. If you guys check out Mauricio's name under it, go to ledn.io. So you can go check out the how do you say it, Mauricio? I keep mispronouncing it.
Ledn. No, but it's good. You know, when we were coming up with it, people would ask us, how do you pronounce it? And I would always say Ledn, but I always said in the future, Ledn will be the correct way of writing lend. So lend, like lend,
it's working.
The verb lend, the verb to lend will be synonymous to lend. So
well, it's already working because I already said it. All right. Okay. All right, everybody, let's get to news. We have a lot to talk about today. Let's check it out. Here we go.
The Daily News.
I want to give a shout out to our sponsor, Foundation Devices. It's self-custody done right. They built a premium grade hardware wallet called Passport right here in the US. It's fully open source and verifiable. It's the most intuitive Bitcoin wallet designed with a UX reminiscent of a simple feature phone. So you will know how to navigate it and use it the moment you pick it up. Get your Bitcoin off exchanges and into your own hands in just a few minutes. Experience the peace of mind that comes with taking ownership of your own keys. After a massive sellout during Bitcoin Miami 2023, the Passport is back in stock at foundationdevices.com. Bitcoin only, open source verifiable, completely air-gapped security model, gorgeous design craft, premium grade materials. If you're thinking about getting your Bitcoin off exchanges, this is the one for you. Check out the Passport link in the show notes below to learn more. All right, everybody, I made it incredibly easy for you guys. You could scan the QR code on your screen. It'll take you directly to the Foundation Devices website, where you guys can get yourself a Passport hardware wallet. Remember, guys, not your keys, not your cheese. If you pair this up with the Envoy app, by the way, it makes it incredibly easy to spend. If you want to do that for whatever reason, don't suggest it. You got to hodl. But if you do want to spend your cold storage Bitcoin, you can pair it up with the Envoy app. Makes it incredibly easy. The Envoy app allows you for it to be connected to your own node. It's absolutely awesome. When I showed it to Opti was like, wow, this is incredibly easy. So guys, take self-custody of your Bitcoin, get yourself a hardware wallet. Of course, we recommend our sponsor, Passport Foundation Devices.
Wait, Nico, before you go on, Passport and Envoy is OptiProof.
OptiProof. There we go. I don't know what that means, but I'm assuming it's a good thing.
Left side of the bell curve confirmed.
So it's so easy to use. I'm telling you, like it's incredibly easy. Guys, you don't understand. Mighty Stu, you've been here for a minute. Like, bro, 8 years ago, like when I first got into this, self-custody sucked ass. I'm going to say it. Okay. It just like, bro, like it was not easy. It was not like it was like alien. You had like the devices that were available. Like so many great entrepreneurs, so many great companies are solving this issue, and it's become incredibly easy. But it wasn't back in the day.
It was not, man. I still remember people sending me like bread wallet and things like paper. Like it was not that they're bad, but like there was no hardware devices for quality hardware devices that were easy to use were very hard to find.
Yeah, and then it made cold storage like difficult, right? So it's like it's so much easier nowadays. Anyways, okay. So I do want to do an ETF update. I do want to talk about the macro stuff, the Fed meeting, Mauricio, we were talking about earlier. I think it completely relates to why you guys tuned in today, which is what is going on with the price of Bitcoin. Is it BlackRock? Is it suppression? Yesterday, we made the argument that I don't think it's a coincidence that the Hong Kong ETF, which has to be approved by the CCP. We showed you guys the Bloomberg article. It released and the price of Bitcoin dumped. Obviously, the CCP isn't a big fan of Bitcoin. They've attacked the price before when they banned Bitcoin mining in the last run up. I believe that's one of the primary reasons as to why Bitcoin didn't hit 100K last cycle. And as soon as that ETF was released, price of Bitcoin dumped. Oh, by the way, super chat from Vake. Thank you for the $5. Bitcoin is under attack from every angle these days. Don't let the Fed shake you out. Stay humble, stack sats, and hodl on. And also stay solvent. So I want to talk about all this, but look, guys, I mean, it speaks for itself. We used to show you guys this every single day. And then I was like, why am I going to show this anymore? Because literally these numbers have been going sideways for a while. So in terms of the inflows for BlackRock, they've been frozen, not as in like frozen as in they're not accepting inflows, but they've been going sideways for the last 4 days. That's never happened before. Fidelity, it's the same. It's been going sideways for the last 4 days. ARC, the same. Seems like the grayscale one continues to like fall off a cliff. But Mauricio was making a really good point, and it actually, and I remember I was speaking to my dad this morning, and he gave me the same answer that Mauricio was saying, which is like, you know, the Fed meeting that's going to be happening on later today is playing a huge role. And I remember I was reading this article, one of the newsletters that I'm subscribed to, and basically what it was making the case for is that the root cause of demand drying up for the ETFs is found at the macro level. And it was making the case that basically Bitcoin isn't the only major asset to perform poorly this month. So, Mauricio, I know you're more well-versed on the traditional financial side of things. So what is going on with the Fed? What are people waiting for? Why is the price dumping like it was? I thought we were going up forever, Laura. What happened?
Well, first of all, my crystal ball is broken. No, I'm kidding. But nobody has, and obviously not financial advice and all the fun jazz. But I will say, to the point someone else, I think Derek or somebody was making in the comments, like, yes, we in Bitcoin tend to see every Bitcoin price move as a Bitcoin-centric event. We believe we live in a Bitcoin-centric world. So when Bitcoin's moving, it must be that something went wrong with Bitcoin, or did Bitcoin did something right. My view is actually not the case. I think Bitcoin does not operate in a vacuum. It's very much a macro asset these days. And if you look at what's been happening with macro assets recently, there's a couple of things to consider. Number one is Bitcoin comes from an absolute tear of a run up from 20K to basically 73K, blew through a brand new all-time high in a year. All of this in the context of interest rates being 5.25%, which no one expected a risk asset like Bitcoin to go up this way in an environment like this. Then you layer on the fact that you have an asset like gold move up 20% since January. And just to put this into context, gold is a $50 trillion asset class. So when gold goes up 20%, that means there's two equivalents of two entire Bitcoin market caps add it into gold. Okay, so gold, as of this morning before I came in, has been down 5% over the last little bit, over the last 2 weeks, sorry, and that equates to about $750 million. So that's almost one Bitcoin market cap and change that gold is down. So again, in percentage terms, it's Bitcoin obviously is down further than gold, but in absolute terms, what's happening in gold dwarfs every type of price action we're seeing in Bitcoin. Now, now the other thing is when the ETFs came online, the buyers around ETFs and the registered investment advisors and such, they are a lot of the ETF positioning is going to come from registered investment advisors, and registered investment advisors have to respond to their clients for their allocations. A lot of them, and this you yourself listening can put yourself in the shoes of a registered investment advisor. Would you recommend to your client to add Bitcoin to their portfolios at an all-time high of 73K in interest rates of 5.25%, or would you decide that you're going to wait and put your client in, or suggest that your client buys in when you're not at all-time high, so that you have a little better chances of performing better? My answers would be on the latter. I think a lot of the flows that we saw at the beginning of the year was people coming in, like individual investors coming in, and there have been some allocations from some registered investments, RIAs and wealth managers, but not to the extent that I would have expected, and largely because of the price action and the positioning. I think that when you look at the reports for Q2, you're going to see a lot more people allocated into Bitcoin ETFs thanks to the investment advisors, because they're much more comfortable bringing them in at, say, 50 than they would be at 70. So the market got ahead of itself in terms of Bitcoin getting ahead of itself with the halving and the ETFs. I think this is a natural correction in price, and I think this is very much macro driven. This is not Bitcoin related. I think this is a good buying opportunity, frankly, not investment advice.
100%. I 100% agree with you. Not investment advice. Consolidation is good. Like the fact that we ripped, it was literally like a straight line up. Like that tends not to be good. You don't want it to just go like that, because it's going to end the run short or something like that. The bigger the rip and the longer it goes for, the bigger the hangover, right? So if we start consolidating at these prices, it kind of sets the platform for if Bitcoin follows the historical pattern, it sets the platform for the party of next year, right? The kind of the blow off top, the parabola phase of 2025, when hopefully we break 100K. Maybe we break 100K at the end of the year. Who knows, right? No one has a crystal ball. But you said something really interesting. You buried the lead there, and I kind of wanted to double back to it, because this has never happened before in Bitcoin's history. And I don't think people understand the significance of this. We touched upon it a little bit when the ETF was approved, but for the first time, you have some of the best salesmen in the world, right? That are pitching some of the wealthiest people in the world on Bitcoin. So could you talk a little bit about that? Because you're talking about investment advisors, and I think, if you're a Bitcoiner, perhaps you're not exposed to that side of traditional finance, like they say, traditional finance. Perhaps you're not aware of what's going on, but you have these wealth managers that have a tremendous amount of assets under management, right? They have wealthy clients, and they're pitching them on Bitcoin. Could you talk a little bit about that, Mauricio? Because I think that's a game changer, in my opinion.
100%. And I think with the ETFs, to me, the most exciting thing about the ETFs, again, it's the ETFs just they're a wrapper on Bitcoin, a wrapper that not many people watching this show would ever want to use outside of a 401k or a registered investment or tax sheltered account. But it is a wrapper that many people that do have those really large, retirement accounts or 401ks can now access Bitcoin through those accounts, there's a lot of wealth parked in retirement savings in the US at like an absurd amount. And that wealth did not have access to spot Bitcoin in the past, or at least not in an easy way. And believe it or not, a lot of people in this stage of their lives are not necessarily the most tech forward, and they're not necessarily the most comfortable holding self-custody, as much as many of us on this show are huge advocates for it, and we will recommend people hold self-custody. But some people they don't feel like they have the wits to do it, or the mental or the right estate planning to do this comfortably. So they'll run to the ETFs. You have these salespeople now, to your point, Nico, an army of salespeople that manage a lot of wealth that are now going to their clients to say, hey, I can now put you in Bitcoin. I'm sure, these are the reasons why you should come in. a lot of those clients are looking to make that conversation as easy as possible. And so when they're having this conversation with your clients, they'll go something like, hey, we just have the new ETF. They need a few things. One, they need these ETFs to at least have operated for about a quarter, like at least a quarter, like one reporting cycle. So they have some sense of who holds what, how do they perform, what are the volumes, what's the depth. Once this is through, they'll say, okay, I'll wait till the right entry point so that I can go and recommend this to my clients. An all-time high of 73K after a 3x rally in the last 2 months is not necessarily the most conservative point to bring in someone into a new asset class, especially if they're learning about it for the first time. So they were likely waiting for a dip. These big pools of money were not going to YOLO in at all-time highs and bring their clients on, market buying relentlessly. They were going to wait. They're much more deliberate. They're much more thoughtful. And I think that you're going to see some of them start coming in, and those flows will likely get reversed. I think a lot of people, frankly, especially in the investor community, are sitting on their hands until this Fed meeting, because a lot of people expect the Fed to come up a lot more hawkish and say that they're going to need to keep rates higher for longer than anyone thought. And they might even glimpse that they won't be able to cut rates this year, which I think is what people are a little bit fearful of. So once this cloud from the Fed is removed, I think you're going to see a little more stability in the markets. At least that's what I would expect to see.
100%. And people have been anticipating, right? And I'm going to put my little guys, I have a little Nico macro hat on, shout out dad. But yeah, inflation's been sticky. They can't bring it down. Full employment, which means massive consumer spending, and they can't bring it down. Right. So, it's what you said, Mauricio. I think people are expecting the Fed to basically not signal anything, saying like, look, like, we can't do anything. We have to bring inflation under control. It's not coming. It's like our usual tools of bringing it down is not working. There's full employment. People are spending. What's going on? And I think there's consequences to it. And I think Bitcoin's reached to such high levels that now it is considered like a macro asset. Like it's still, I agree with Saylor. It still is an alternative asset 100%, but it's still, it's graduated, right? It's no longer this like, this little kind of like side thing, especially at these market caps, right? For $1.1 trillion exposure from BlackRock. BlackRock owns, basically 1% of the supply, right? 274,000 Bitcoin. I think I'm doing the math right or wrong. It's 1%, right? It's a little bit more than 1%.
I think so.
It's more than 1%. So yeah, I mean they own a huge portion of, let me see what the math is. It's 1.3%. So close. So they own a huge portion of the Bitcoin supply, and I think there's definitely influence there. Opti, what's your take on all this before we get onto the culture to talk about I'm going to say lend again.
That's okay, bro.
Let in.
Dude, the marketing is working, bro. The marketing is working. Ledend. Before we talk about Ledend. Anyways, Opti, what's your take on all this?
Well, I absolutely love Mauricio's insight. It definitely gives a whole picture of what's going on. And, all of us Bitcoiners, at least all my friends, we all think of Bitcoin as a risk-off asset. But as Mauricio said earlier, Bitcoin doesn't live in a vacuum. And there is a lot of other factors that are now pushing on Bitcoin. And now all of us Bitcoiners, especially me, like I'm the type of Bitcoiner that like completely doesn't care about what's going on with any of the macro stuff. I'm just hold Bitcoin. That's all that really matters. The only free market money in the world. That, to me, that's the only thing that matters. But that's also like a very naive, shallow understanding of what's going on. Guys, we are in a point right now where Bitcoin is maturing, and there is a lot of other factors going on there. And everyone in the chat knows, especially we talk about this constantly, that the Bitcoin price moves on the margin because of traders. And if we're seeing everything we're seeing in the world right now, of course, people are trying to profit off the market. So if they can still move the Bitcoin price, we know they're going to do that because they make money off of it. So it's just one of those things where, like, don't freak out. We knew that this was going to happen. I think historically we've seen around like 5 or 6 corrections through a bull market. And so, as we've said throughout the whole show, this is a very healthy correction. If we just completely ripped, then it would have probably not gone as far as we'd like it to. So we definitely need a strong foundation for us to make a incredible move in the next, 12 to 18 months. So no time to freak out. This is standard par for the course movements in Bitcoin. Bitcoin doesn't just move up completely, from 0 to $1 million in a straight line. But it is very important to remember that Bitcoin is starting to enter the macro conversation. And it's something to, I think, be aware of as a Bitcoiner that only focuses on Bitcoin. And again, I say it all the time, and we all know, and Mauricio touched on it as well. We joke about buying historical tops or local tops because they're historical timestamps, and we're proud of buying the tops. And we're like, yeah, we don't trade Bitcoin. We just buy whenever we can. And I mean, I was even putting like stupid market orders of buying Bitcoin at 69,420 last top and got absolutely wrecked. But like, I really don't care. It's just like, it's fun to have that price point, be like, yeah, I bought it there. And in the future, I'll be the one laughing. And so we know that all of, I hate using the meme smart money, but when I say smart money, everyone knows what I'm talking about. But smart money doesn't FOMO into markets. They take a long time to get their positions. They're very okay with taking their time to get into a position, to know what they want to actually invest in. Like a lot of my Bitcoin friends, we just YOLO'd into Bitcoin, and then on the back end, we tried to understand Bitcoin. That's not how quote unquote smart money moves. They understand the markets before they get into the markets. And again, guys, the ETFs just got dropped, like 3 months ago. And so now that all the institutions have an opportunity to get into Bitcoin, it's not like they're going to FOMO straight into the market. They're going to understand what the market is. They got to understand what Bitcoin is, what all of us didn't do. So I think Mauricio's point is, once Q2 ends, I think we're going to see a lot more exposure into Bitcoin. And then on that same point, I say it all the time, the billionaire Bitcoin FUD playbook, it's always the same. You FUD Bitcoin, you don't like Bitcoin, while the whole time you're stacking Bitcoin, you're trying to move the Bitcoin market. And until that playbook doesn't work, they're going to continue to do it. So just keep stacking. Make sure you have some dry powder if you're smart, or not. Just do what I do and buy local tops and just, build some character and understand what you're holding. This is just par for the course for Bitcoiners. But I do want to mention one thing, Nico. Last week, I'm pretty sure it was last week, or maybe I'm mixing up my time frames, but BlackRock just did a Bitcoin Corporations for Bitcoin conference. We have MicroStrategy doing one. I believe it just started today. It's happening this week. So that conversation is happening. And again, guys, they move slower. They're on Titanic boats while we're on life rafts, and we can be as agile as we want, but it takes time for them to get their exposure, to fully pack their bags. And until that happens, we're just going to get some cheap sats. So it is what it is, man.
100%. Go ahead.
That deserves. I don't have the controls, but that deserves a. I got it.
Oh man. Opti slaying it. Wow, bro. We put on our macro hats today.
Hey, look, Nico, as I say all the time, I'm so left side of the bell curve that I transcend the bell curve and I end up on the right side. So, hey, Opti for the win.
Opti for the win, bro. All right, guys, we do want to give a very special shout out to our sponsor. Of course, I'm talking about the Orange Pill app. Find Bitcoiners, events, and merchants near you. The Orange Pill app is the Bitcoin social layer. Stack friends who stack sats has a really clever filtration system, so you'll only find fellow Bitcoiners that are on the app. You won't get those weird messages from strange people saying, if you send me 2 Bitcoin or 1 Bitcoin, I'll send you 2. You only find fellow Bitcoiners in the app. It has a cool geographic feature, so you'll find Bitcoiners near you if you move to a new city or you're traveling. It's a great way to connect with fellow Bitcoiners. It's probably a good idea to build up that Rolodex because Bitcoiners are going to be some of the most influential and powerful people in the next 5 to 10 years. There's also the Simply Bitcoin group chat. It's been absolutely popping in there, by the way. Appreciate you guys being so active. If you guys want to join it, check the link in the video description. Highly recommend downloading the app, just connecting with fellow Bitcoiners. A great resource. Can't recommend it enough. Check out the Orange Pill app today. Scan the QR code or check the link in the video description.
The Daily Culture.
I do also want to give a shout out to our sponsor, Cabin Racks. They are the most trusted place to buy, sell, and host mining equipment. Check out their racks today by scanning the QR code or checking the link in the video description. That will take you directly to their Telegram marketplace where you can connect a member of their sales team. They make purchasing their products easy and transparent. You could also sell your mining equipment with them, access their vast network of domestic and international customers when you sell your mining equipment with Kaboom Racks. What are you waiting for? Start your Bitcoin mining journey today. This is where I personally buy my Bitcoin mining ASICs. Opti, it's all yours.
Let's go. All right. Well, Mauricio, this is where we get to talk about the stuff you're building. So I will pull up the website, but I guess before, or as I'm doing that, let's plug let in. Who is the ideal customer and what is your goal as a company?
Our ideal customer is any Bitcoiner that doesn't want to sell their Bitcoin and they either want to divest or invest in a different asset class, or they need cash for some type of emergency and they don't want to sell their Bitcoin. The common thread is Bitcoin is the crown jewel of your portfolio, and something came up, either an investment opportunity or something came up in your life. Your dog had to get surgery for whatever reason. Like, we've had people use our loans to buy houses in Mexico, and we've had people use our loans to pay for surgeries for their cats in 24 hours. So the use cases sort of range into all the things that you could potentially do with money. But the premise of Bitcoin, or the premise of Ledin, is basically an ability for you to get liquidity without having to go and sell your Bitcoin and create a taxable event for yourself. And the genesis of Ledin was really, I was tired of selling my Bitcoin. I started mining. Nico knows this. I started mining in Venezuela with my family and helped many people set up other mines and grow their mines. And the second you get your first Bitcoin, you want a second one and a third one, and you want to grow the mine. But to grow the mine, you have to sell the Bitcoin, which was a horrible financial decision time and again. And nobody would give us a loan. And out of frustration, half frustration and half seeing a massive opportunity ahead of us, we decided to try to solve our own problem with the thesis that if we got to solve our own problem by borrowing, by obtaining financing, putting a Bitcoin as collateral. We were in Canada at the time. Bitcoin is Bitcoin, no matter where it is. So we were going to be able to offer this to miners everywhere and to people everywhere. And that's how the story played out. We were able to issue Canada's first Bitcoin-backed loan in November 2018, actually to Bills and to Francis Pouliot, many probably of you here know. And then from there on out, we just kept helping other Bitcoiners in Canada. Then we expanded the service to the US, Mexico, and other places. And now we service 125 countries, and it's been phenomenal.
That's awesome. That's cool. I've been in that situation, but I've personally taken Bitcoin back loan to go full degen and buy more Bitcoin, which I don't recommend, but I am guilty of that myself. And and also too, like I was telling this to Mauricio, but I'll give you guys a TLDR before we. This is way too long of a conversation, but essentially, guys, if you start making content, don't expect to make money for like 2 years. So like at minimum, and then it's a different story. But there was definitely situations where I'm like, dude, like, holy cow, like I really believe in Simply. I want to grow my business. I want to grow whatever, but I also need money to pay for food and eat and live, right? Because you kind of need that, right? So it kind of creates a situation where, you can use these types of offerings and products. We got a comment from Higher Calling. Love the platform. Seems like we have some users already in the audience. Anyway, so I remember from our conversation in Texas, we were together at BitBlock Boom, Mauricio, that you, if my memory serves me correctly, you offer two types of collateral loans, right? So one that is, it doesn't move the Bitcoin, right? And then another one that is more so put in. What are the difference between the two?
Yes. So as you know, and as everybody knows, when you're lending, and when any lending product has risk, okay, any lending product that requires you to transfer custody of your asset to anyone, whether it's Ledin or anyone else, there is an element of risk on that product. Because again, you're transferring a collateral asset and you're getting a loan in return, but because our loans are over collateralized, you are putting more collateral than the loan that you're getting. So there is a financial risk for you when you put your collateral anywhere, whether it's Ledin or any other lending company, there's an element of risk. We know that people have preferences, and obviously given everything that's happened, people need to have choice and they need to be able to pick the type of treatment and the type of risk they want to take. So at Ledin, there's two types of collateral treatments. There is our custodial loans or our custody loans, where the assets just sit in cold storage throughout the loan. They come at a set interest rate. The interest rate for those loans right now is 17.9%. Then there's also our standard loans, which give us the right to lend the Bitcoin collateral in the right market conditions to pass on those savings to you through a lower interest rate. And the interest rate on that loan, for people's context, is 14.4. So the difference is between 18 and 14.4. And importantly, these two products are entirely ring fenced, such that if there is any type of issue or risk or any event of impairment on the standard loans, they would not impact the custody loans or other parts of the business. So the business has been basically ring fenced so that, you know, anything that happened in 2022 wouldn't create an existential risk to Ledn. And I welcome anyone listening to this that is potentially interested in our services or anyone else's to please do your diligence. We are an open book. We produce a report called the Open Book Report every month that shows clients how we use the assets internally at Ledn and how they're lent to power the products that exist. And we also provide proof of reserves every 6 months. We have a certified public accountant that comes into Ledn and produces a report that everyone can see, and you can verify through the accountant's website to ensure that your balance to the penny and to the Satoshi was included in that report. And our most recent one actually was finished last month. So anyone listening can go check it out. But don't trust, verify, do your diligence. I even put a list of questions that you should ask lenders that I invite you to ask ourselves and anyone else. And you can find that on my Twitter. But yeah, that's basically it.
100, beautiful. And I love this question. I'm scrolling up to find it, which is Loco TX. Wait, you can borrow against your BTC to buy more BTC. So like Sailor's infinite money glitch, except he has the power of a giant publicly traded Fortune 500 company to leverage. That essentially that's the thing, right? Now, that being said, you guys have to understand that you will get margin called if the price of Bitcoin starts to fluctuate. So you're on the hook for the amount that you borrowed, right? And you put your Bitcoin up as collateral. It's generally, I don't know what the percentage, it's like 200%. Is it 200%?
2 to 1, yeah.
2 to 1. Okay. So you have to have 200% of the value of the original loan there. Now, you guys could see where this gets very sticky is if you took out a loan at 74K when we hit the top, and now we're down to 57K. And you can potentially get yourself in a situation where if you don't have the sufficient Bitcoin to keep meeting that 200% collateral requirement, you get margin called, right? So essentially, you know, the platform has to protect itself. So you can get into very, very sticky situations, which is why I called myself a degen when I did it. I survived. And it was a happy ending, but during the experience, of course, like it's not so much. However, what I would say to most people is don't do that. But you can do whatever you want with your money. But, I would see this more so, which is what I've been doing recently, is for business expenses or for like life expenses and stuff like that. This is a great tool that you can add to your arsenal, specifically also because remember, guys, once you take a loan against your Bitcoin, it's not a taxable event because it's a loan. So that cash that you're getting, you're not paying income tax on it because it's a loan. And also, and again, this isn't in the ideal situation. And if you're responsible and if you understand the risk, what tends to happen over time is as the price of Bitcoin goes up higher, that amount of collateral tends to grow with it, right? So, and I'm assuming, Mauricio, you give the ability for people to withdraw after it gets to, right?
Absolutely. Yeah. We prompt you to do so, actually. We prompt you to take it out when you get over collateralized. And yeah, I think the points you're making are bang on, Nico. So don't let me stop you.
So yeah, it creates this this beautiful situation where, if you're responsible, if you don't over leverage, I think maybe that's the correct term. It creates a situation where like you could keep rolling over that loan and the amount of quote unquote Bitcoin that you have collateralized, you can keep withdrawing it because the value of the Bitcoin keeps going higher. But the cash amount that you borrowed stays the same. You're actually paying it off. So it's very interesting if you're responsible, you can kind of use this to your advantage. That's the really key thing is, and remember, Sailor's doing the exact same thing, just on a much more massive scale and a complicated scale, but essentially it's the infinite money hack.
It's the same asset. It's the same asset and it's the same liability. Basically, what you're doing is you're going short dollars, long Bitcoin. Okay, you're doing short weak currency, long hard currency. This is the instrument. The instrument that's allowed Americans to, with a large amount of leverage and subsidized by the government, to short their own dollar into infinity and to perpetuate their wealth doing so. And this product is called a mortgage, because a mortgage, a lot of people see it as a loan to buy a house. It's actually a massive short on the US dollar anchored by a physical property that is a house, in this case, a US residential property. So what we are doing is simply allowing you to borrow a weak instrument by holding a strong instrument and letting time do its thing. That's simple as that.
100%. And we got a question from, and then I'll pass it on to Opti because I've been kind of hijacked it. I apologize, Opti. Just have experience with the
Hey, bro, do you love it
with the collateralized loans. Anyways, so we have Top Roller in the chat. Can you ask him what he thinks of the current interest rate environment?
And he expanded a little bit. He goes, I meant his business is all about interest rates. I'm only wondering if he thinks interest rates might come down in the next year or two.
Yeah, I mean, without getting into the weeds, I think that there's a limit to how long these rates can last. I think the economy is clearly suffering. If you look at who's hiring and what's growing, it's really only the government that's hiring people. Like private companies aren't growing or hiring anything or anybody. So I don't think that they can keep these rates long enough for too much longer, because they're gonna kill the economy. They're gonna kill their own popularity. They're not gonna get reelected. And so I think that my cynical view is that something magical is going to happen between now and November that's going to warrant more money printing or lower interest rates. And if they don't lower interest rates, they're going to run deficits to infinity to make up for the fact that they haven't lowered interest rates. But everybody right now is doing basically a big game of chicken with the US government, because all economies are hurting, including Canada, including other central banks. But if they lower their interest rates right now, their currencies will get absolutely squashed. I mean, just look at what's happening in Japan, right? And so I think that interest rates are only going to remain high for so long. I think that if they're able to keep them this high until the election, they will. But I don't think it goes too much farther after the election. No matter who wins, there's going to be a massive lobby on Jerome and Janet and everybody just to bring these things down. So I don't think that they can stay this high for long.
Love it. Mauricio, there's a chat in here. Comment. I think he might have a little confusion. So he goes, how much is a loan against one BTC? 40%? I think you were saying
50%. So let's just, for argument's sake, it's 58K, gang. So at 58K, we would be at 26.5. 26.5 times 2 is 58, I think. So yeah. So basically half of the Bitcoin value, half of the market value of Bitcoin. And there's a calculator on our website. If you go to ledn.io/borrow and you put what collateral amount you have, it'll spit out how much you could borrow, and they'll give you all the the little buttons and options for you to select what type of loan you want, etc. So there's a really easy to use calculator, but in general terms, it's half of the value of the Bitcoin.
Love it. And a further question for people in the chat that are interested in this: is there a minimum to how much they can loan from you?
$500 is our minimum loan amount. So any amount over $500, we can disperse. And processing times are 24 hours to get your loan approved, and less than 24 hours typically after that to get the money out to you. And we disperse in a variety of currencies, including stable coins, US dollars, etc.
Love it. Okay, man. I don't know, Nico, you might have a better handle of this, but Mauricio, is there anything else you want to tell the people? Maybe why they should use it or whatever? Any more PSAs, contacts, all that good stuff?
No, listen, we offer a few other things that are in addition to loans. We offer dual cryptocurrency notes. We offer services that let you earn interest on your USDC, your stable coins, even your Bitcoin as well. I encourage everybody to if you're interested, take a look at us, research us, diligence us. Please diligence us. Contact me if you have any questions. Myself or my team will be happy to answer you. And yeah, I mean, we're an open book, and just what I recommend to people is that take the time to understand the risk, to understand the services and how they work. and then come to us. It makes it a much better experience for all of you. And as far as the loans go, to Nico's point, we want people to come out of their loans with more Bitcoin than they came into them, right? So we want everybody to plan, and we want everybody to use these things responsibly. And loans are like a power tool. If you use it correctly, you can build a building. It'll help you accelerate how fast you can build your wealth. If you don't plan accordingly, you could hurt yourself. So it's just like any other tool. So we just want people to understand what it can do and to use it accordingly.
Yeah, and I think that's a really, really important point. Like, we have Mikkel in the chat, like, would right now be a good time to take out a loan? Again, guys, you have to understand, please look into this. Essentially what you're doing is you'd be leveraging your Bitcoin. And there are risks to that because of Bitcoin's volatility, right? So, for example, if you took out you put one Bitcoin as collateral, you got, let's say 60 round up, you got $30,000 in cash, and the Bitcoin price dumps 50%. Well, you're going to have to put 2 Bitcoin on collateral now, right? And let's say Bitcoin keeps dropping after that, you might be in a position where you have to put 3 Bitcoin in collateral. Now, if you have, and again, I'm just talking in Bitcoin terms to simplify it. If you're responsible with it, you could use it in terms of you could use it in order to invest in a business, pay for things, but there are risks to it, right? So we want to show you guys all the tools that you guys could use in your Bitcoin journey, but there is an associated risk to this. All right, obviously the ideal case is Bitcoin in self-custody. But like what Mauricio was saying, I don't think the world would work if people didn't have access to loans to build up their businesses and all that stuff.
I think that's well said. Knowledge is power. If you know how this thing works and you know how to use it to your advantage, you can make a lot with it.
100%.
And actually, one more question in here for Mauricio to clarify. Look at the tree. Says, how do you pay it back? How do you pay the loans back?
Yeah, no, great question. So you can pay it back with stable coins, dollars, if you want to repay us back. You can also use some of the Bitcoin you have in collateral to basically get us to deduct what's outstanding and give you back the Bitcoin. That will be a sale of your Bitcoin, so that may have a taxable event attached to that if you decide to repay that way. But what happens in a lot of cases is, people will take out a loan, late last year when Bitcoin was near 20K, Bitcoin rips to an all-time high of 73K. And when Bitcoin's at 73K, people either decide to come up with the cash to repay the loan, bring the Bitcoin back to self-custody, or they can use a fraction of the Bitcoin to repay the loan, which you'll now need much less Bitcoin to repay the loan than you did at the beginning because it's 3x. And you basically take off the delta, and they're okay to take that potential tax because they have, other line items in the report that may offset that. So again, it's really a choice. It's how you want to repay it, but we give you all the sort of options possible so you can do this in the most convenient way for you.
100%.
Love it.
And I wanted to, sorry to interrupt you.
No, go ahead,
I think that this is like an elephant in the room that has to be addressed. We had a comment from Northern Logistics SEO. And one of the things that I loved talking about with Mauricio in Texas was the importance of transparency, right? The importance of look, here are the risks. If you guys are open to the risk, here's everything that's going on. So that's a really good point, right? Northern Logistics SEO brought up Celsius and the implosion, and it hurt a tremendous amount of people. He's saying, look, I highly suggest not taking a loan against your Bitcoin. The safest bet, of course, is keeping your Bitcoin in self-custody.
Yeah, that's what I was going to say.
But I would say to you, Mauricio, is, what is and I don't mean this question to be insulting whatsoever, but what is the difference between a platform like, I'm going to say Lend, bro, because I'm having trouble saying the HODL version of Lend.
Hashtag Nico can't speak.
So what is the difference between Celsius and Lend in terms of how you guys run your shop?
Oh man, I mean, it's a big difference. So first, I'll start with saying that we actually just refinanced more than $40 million worth of loans from Celsius clients out of bankruptcy. They came to us actually because if they didn't refinance with a third-party lender, they would be subject to an even bigger taxable event. So we were happy to step up and bring them over. And then, we have a great new group of clients that have, and some really significant volume that we picked up by doing so. But Celsius and Ledin could not be more different. And one of the challenges was the fact that they would dress themselves and act like they were doing all the things that we were doing, but in the back end they were doing none of it. So we at Ledin are very focused. We've only had we just added support for 2 more assets last year. So at Ledin today we support Bitcoin, USDC, Tether, and Ethereum. And Tether and Ethereum actually came earlier this year. It's for the longest time, we've been Bitcoin only. And all the assets that I just quoted you are the deepest and most liquid assets in the industry. And so there's always demand for these assets. A common thread amongst all the companies that failed were that they all supported hundreds of assets, and many had their own native tokens, the hundreds of assets creates a massive risk because you now have a lending desk that has to support a bunch of things that have no demand and no depth and no liquidity. And that makes you take risks because you'll swap out of that Shiba Inu that nobody wants for some Bitcoin, but then you have to give somebody back that Shiba Inu. And that creates an issue because you're not hedging that. So there were mismatches of assets and liabilities. There were mismatches of term. People were depositing open term dollars, and Celsius was investing that in multi-year mining projects that had 5 and 6 year paybacks. Nico, you know this. So when people showed up to get their dollars back, of course you couldn't liquidate a mining facility to give back the deposit. So they went insolvent. So there was a plethora of errors that they did wrong, and risk management that was never ever there. Famously, Celsius was participating in the Terra Luna scheme. So when that started falling, they started yanking assets and everybody could see it on chain. At Ledin, we never deployed our client assets into DeFi to generate yield. So we were never a part of that. We started doing a proof of reserves back in 2021 when people were adding comp tokens and DeFi tokens. We were building an accounting proof of reserves into our model. And so I think, again, Ledin and Celsius could not be more different. A lot of these differences you'll find in the terms and conditions, which are things that people unfortunately don't often read. And to get to the real difference, you have to spend the time to come and diligence us, which again, in the zero interest rate environment was something that happened rarely. So, and people would just I had clients come to me and say, they were withdrawing US dollars and taking them to Celsius because Celsius was offering a 12% yield when Ledin was paying, I think it was 8. And they were saying, how can, I'm going to take this to Celsius because they're paying 12. And I would say to them, how are they paying 12? I can tell you where my 8 comes from. You give it to me at 8. I lend it to Bitcoiners that don't want to sell their Bitcoin for 10. That 2% spread is how I make money. That's how I pay my 8. How do they pay 12 if they are lending at 0? And the answer was, all sorts of gimmicks and things that they wouldn't tell you. But the fact is that the underlying businesses could not have been more different. And again, I welcome people to, fact check everything I'm saying and come with your questions to us to understand the risks that you might be taking by facing us. But yeah, the 2 companies could not have been more different.
100%. And I'm really glad that you addressed that, and I'm really glad that the audience asked that question as well, because, that was a huge debacle. Anyways, thank you, Mauricio, for coming on the show today.
Wait. Let's give Mauricio one last 2 sats. What's the last message you want to give to the audience? It could be about Ledin. It could be about Bitcoin. It could be about life. What's the last advice you want to give to the people out there?
Don't sell your Bitcoin. It's very simple. Just don't sell your Bitcoin.
Don't sell your don't price your net worth in dollar terms. Price your net worth in Bitcoin terms. If you have more Bitcoin than the day before, then you're doing it right. If you have less, then you're doing it wrong. Anyways, guys, thank you so much for tuning into the show today. I'm your host, Nikos. My legendary co-host, Optimus Fields. They're very special guests from Ledin. Mauricio, thank you so much for coming on the show today. Talking about the platform, what you guys are doing, which I think it plays an incredibly important role in the ecosystem. Of course, guys, watch your risk, and appreciate you coming on the show.
Thanks, guys. Cheers.
Guys, if you enjoyed the show, whoa, what happened there, Opti? All right. All right, guys, if you enjoyed the show, you know what to do. Smash the like button. Consider subscribing if you feel like we provided you value. But the number one thing you could do to help push the peaceful Bitcoin revolution, share Bitcoin content, share Bitcoin culture, spread it far and wide. And love you all. We'll see you tomorrow for a brand new episode of Simply Bitcoin Live. Peace out, everybody.
Episode was brought to you by bitcoinwell.com, on a mission to enable independence.